Hey, good morning, everyone. Marty Mazura here, the 29th of April, 2021. This is going to be a relatively quick technical update. This is for those of you who have let me know that you enjoy getting into these weeds, so to speak. Probably just go through each position. We'll see how quick it goes. If it looks like there's time, I'll jump to currencies as well. Maybe next time I'll start with currencies, but I just want to kind of update you on how each one of our core positions looks technically. And then remind you of my favorite quote along these lines from hedge fund manager Como Shea. People get all excited about price movements, but they completely misunderstand that there's a bigger picture in which those price movements happen. So we're going to look at price movements, but the bigger picture is the macro fundamentals. Price movements only have meaning in the context of the fundamental landscape. To use a sailing analogy, the wind matters, but the tide matters too. If you don't know what the tide is and you plan everything just based on the wind, you're going to crash into the rocks. This is how I, Paul Moshe, and yours truly see fundamentals and technicals. You need to pay attention to both to make sense of the picture. So the price action just tells you what folks are doing, day in and day out, as we know, because of kind of the players in today's market. Many who are moving prices seem to be only focused on prices. That sends signals, gets people thinking things, status quo bias begins to take over, and people can make what are ultimately big mistakes as they make money while taking bad shots. Now, I act as if I know that this is going to end badly. I don't. I just am assessing risk and probabilities. And interestingly, in our technical analyses, as I'm going to show you, things are improving. Things are looking better from a price standpoint, notwithstanding today's really messy market. But yeah, it's maybe a little surprising because we're about to enter a tough seasonal patch for the market, and from some of our other resources that we leverage to do what we do, it looks like global liquidity is beginning to wane a bit, and excess liquidity is really what this market is all about. So when I said recently that we should expect some choppiness going forward, seasonal factors would suggest it, and even liquidity factors. And then very interesting speech last night from our president, kind of about really the where the sentiment is going to be in terms of taxation going forward. He hinted strongly to things, having to do with universal basic income and things like that, things that might be tough to get past, but have real serious implications, both good and bad, for markets. So we'll, of course, pay attention to that. One thing we can count on is some infrastructure spending going forward, which is influencing our U.S. bent in terms of how we allocate among sectors. And then there's the inflation conversation that we keep having herein that is much deeper than Jerome Powell would have suggested yesterday, that, it's transient, it's all about bottlenecks. No, it's not. It's largely about that on a near-term basis. Our focus is there, but it's also on the longer-term implications of what he had to say about monetary policy, what the president had to say last night about fiscal policy going forward, and then some of the demographic / evolutionary trends that I alluded to in my last post yesterday. Didn't see a lot of hits on that one, so there's a good chance you watchers right now may have missed that one. That was my parting comment in the chart of the day yesterday that I think is worth taking a peek at. So in front of you is our financials ETF. This is our biggest position in financial stocks. And, it looks fine. In fact, I kept it at an 8. One asterisk next to that number means it got better. 2 means it got worse. But, we are still in this upward sloping wedge pattern, which when it's, coupled with momentum divergences that are waning, as it was right here before last year's big sell-off, right? That is not this combination in and of itself is not a sell signal, as I keep saying, but it's a sign that the market's getting heavy, and a somewhat of a sell-off or a downtrend wouldn't be hard to pull off if we could get a breakthrough, the upward trend line and so on. But what was positive is we got this little buy signal right here on the moving average convergence divergence. That's good, but we still have, bearish divergences. I do like financials long term, by the way, but in the near term, we should be guarded on just about everything. And technically, this one says that it's really getting heavy up here, and we should not be surprised by a pullback. Banks, just really zeroing on that part of the financial sector. You can see they were wedging up here pretty strongly. And as you see here, we had, flatness here. Actually, at the end there, we had a bearish divergence. Not so much in the MACD, though. But we definitely had an upward sloping wedge. We broke it down, got some momentum, broke through this resistance. Right now, testing that resistance, coming above it. Tested the 50-day exponential moving average. Succeeded that test quite nicely. And it looks okay. It looks constructive to me right here. We'll give it a 7. Really need to see it move up noticeably above that. Interest rates are really up today. That should be good for financials if that were something that were to persist. Buy signal right in here. Tech stocks. Tech is a concern right here. Of course, just epic run up last year, just insane, right? Had this really pretty good uptrend line that got defeated right here. Then we had a higher low and came right back into it, very much in this upward sloping wedge. See, we had us wedging here, before this sell-off with these divergences. Very strong, extended divergences, sell signal right here. Apple gave stellar earnings last night. Facebook, I believe, this morning. NASDAQ popped on that and then promptly rolled over. So, the tech sector looks very heavy to me right here. We'll see. It's one of the smaller weightings in our U.S. stock exposure. Similar look for industrials, kind of a nice channel, you might say, in here. I didn't do well on that line right in here. On a short-term basis, right, you see this, you see what's forming a wedge. You got your divergences, kind of like tech. You have your sell-off right here, but we look like we may be getting some steam back up in here as well. But again, overall picture is one, and I think heaviness might be just a good way to describe that, right? You can see if I do it this way that we had more of a wedge in here. Again, these are pretty good patterns, not trading signals. Just be on the lookout for a breakdown, and then when you come off of these and you come off these long building momentum divergences, and divergence meaning we have new highs and we roll over at a lower high down here. Those are pretty good warning patterns. Material stocks, like them a lot for obvious reasons, right? There's just this big global push for infrastructure, but you still have the same things going on. Negative divergences do have a buy signal that's been lasting in here, pushing the upper end of that wedge. Again, with most of these, we have a nice upward sloping 50-day moving average. This up here looks okay, except for the pattern there, and then the negative divergences here. Pretty consistent, as you've noticed, as I've been doing these now. Pretty consistent among markets and among a lot of the sectors we track. Okay, healthcare. Healthcare had a pretty good week last week. We don't have huge exposure to healthcare like we did when our thesis began getting more cautious. But, we're like everything else. We're wedging up in here, kind of rolling over here in terms of the momentum, as you can see here. I've drawn these arrows. The relative strength index rolling over as well. We'll see. Wouldn't surprise me to see healthcare break down a little bit if we pierce these lower trend lines, and then if we pierce this resistance. There's a few percent of downside action potential there, like just about everything I'm showing you. But XLP is consumer staples stocks. You got to eat, right? This kind of a weak flag pattern. Probably shouldn't have even drawn that. That doesn't seem to be working out. Pushing the lower trend line here pretty hard last few days. This is kind of a beginning of a rollover look here in the 50-day moving average. Definitely a sell signal here on the MACD, really losing it in terms of the relative strength index. worthy of a downgrade to a 6 for now. Utilities, similar look, right? We did have a budding upward trend line here that got busted here this week. Same look in that 50-day moving average, the red line there. Really rolling over here, says sell signal here. Really like energy going forward, to be honest with you. It pays a great dividend, probably the highest dividend sector that we're in right now. I got just a nascent buy signal right in here, coming up here with some momentum. Tested the 50-day moving average, looked like it was rolling over, it's hanging in there, testing this resistance right here. I believe energy stocks are up, they were up earlier this morning. Here we were wedging a little bit before this sell-off down in here with some negative divergences. But, you're just not going to get a lot of build out in capacity. You'll get some, but it's a very capacity constrained sector, as is mining and other things that we like. And so as demand comes back, it's going to push up on the price of energy and the profit margins of energy producers. Energy services companies, to the extent that they will begin to build out as prices rise, well, then they're going to pay these guys to do the work. So concerning looking, rolling over look here on the 50-day moving average, that red line there, but you see yesterday just peaked back above it, jumped off of this support right in here. Just a beginning of a buy signal right in there. Like this one a lot longer term as well. Eurozone stocks, our thesis has Europe and Asia outperforming the US for an extended period going forward for lots of reasons. Valuations, dividend income I kind of think of that as a valuation metric as well. Weaker dollar prospects plays well for foreign currency or foreign stocks and foreign currencies, obviously. Honestly, a reversion back to some normalcy on a relative performance basis. So the setup looks good for an extended period of outperformance. Technicals look good as well. Here you can see we do have the upward wedge, no doubt about it. You see us breaking above that divergent line, so this will be redrawn next time. And but we still have this rolling over look, still in a buy signal here on the MACD. So again, longer term, fundamentally like it a lot. Technically, it looks okay. Like I said in the beginning, technicals are looking better, but suspect. Here, everything's ripe for a decent correction. Virtually everything. Asia Pacific, just mentioned that we like Europe, like Asia a lot as well for similar reasons. Technically, not so much. You've just got a new sell signal right here, breaking down a bit. More of a channel than a wedge. Now you have more here of just kind of your symmetrical triangle pattern, which is a consolidation pattern that would, that will get a breakout. Right now, technical suggested that break could be lower, but it could go in either direction. Nothing more exciting here than a 6. Long term, I think there's lots to be optimistic about. Emerging markets, same story. These are just not developed markets like Western and Central Europe and developed Asia. These are the emerging markets. This is where everybody lives, frankly. 85% of the world's population. It's, of course, where all the growth prospects are, certainly demographically. But it's also, of course, where there's greater risks. In a lower dollar environment, my oh my, emerging markets are a place to be. So many of the same dynamics we talked about in terms of relative performance, dividends, and so on. Pretty good weighting in our overall core position relative to everything else. You can see, nice extended buy signal here in the MACD. Tested and won that test so far against the 50-day moving average, but bumping up against what could be resistance from this previous uptrend line. And so if it doesn't hold, then we're going to have something that looks more like that. And interesting here, we had a down sloping wedge with the beginning right in here of some positive divergences, right? And this would be positive. This would be, you got a negative here, but this is flat from both of those points exactly. And then just coming up off of here, this would not be that. But when you have the opposite of what I keep showing you, when you have a downsloping wedge with positive divergences, that's very, very bullish. And you can see it looks like we're just now beginning to break out of that, broke out sideways and moving a little higher. We'll see how this plays out, though. But technically, this is improved. You can see the one asterisk. India. India is quite the story. Been in the news a lot lately. Tough time with COVID. India's leading economic indicators have been rolling over in negative fashion. Some analysts who I respect a lot are short India at the moment, and it's a new short call of theirs. I took a little different tact and position, frankly, on that, and sure enough, coming off of this area where everybody was freaking out, we're getting a bounce. What I've noticed, folks, is that you find a country amid a world that seems to be improving with vaccines and so forth. Find one that is still, sadly, and I mean that sincerely, suffering mightily from the virus. The minute their COVID numbers start improving, their stocks seem to take off. And I don't even know that we've had that much improvement yet in India, but I think the market's going to anticipate that. And this is a core. We separated our emerging markets exposure to India, looking very seriously at Latin America, Mexico in particular right now, maybe to rotate a small position within our emerging markets into Mexico. And if we do that, I'll give you much more texture on that. But if you think about kind of trends in the world, trends with China, and Mexico's numbers in terms of their actually trade surplus for the first time in 30 years, as well as the natural resources and the cheap labor that they bring to bear. Mexico suddenly looks interesting, which we own in the emerging markets exposure, but not individually like we do India. Gold, as I showed you here, was giving us that bullish downward sloping wedge. Sure enough, it's broken out. It's down today, but it's broken out and it's testing that 50-day moving average, which is looking much more constructive than it was down in here or back in here. And we had a nice extended buy signal here, although that's rolling over a bit. That's why I drew that line right in here. So longer term, boy, listening to the president's speech and the Fed chairman's speech or press conference yesterday, and just understanding, what's going on the world over. Gold, I think, is going to be an important, essential component in every smart portfolio for an extended period going forward, notwithstanding, the profit taking, the ups and downs, the reaction to higher interest rates at times, and so on. I think it's just something that you want to, or that we want to hear, at least for now, what our thesis is. Let the volatility happen. Let the extended period, we had a nice run up here and gave a lot of that back. Let that happen and just own what makes very, very good fundamental sense given what's going on virtually everywhere in the world from a government and central bank standpoint. And gold miners, I've told you this story before, and this would be for metals miners as well. They're making money right now. I think gold miners can make money at $1,100 an ounce. Remember, they have leaned out dramatically, the mining space has, versus where they were so bulged with debt and bulky, 10 years ago. So we've had a nice, 10-year bear market in the commodities and the producers of those commodities. We're seeing really good, cash flow improvement and so forth, much improved balance sheets. It's just a great story to tell. Longer term story to tell. We did have, we were wedging lower. That's bullish, and then we had our nice bullish divergences here. So we had a nice break, tested this, coming back, but going to test that 50-day moving average, almost a sell signal right in here. So short term, I had to downgrade it. Longer term, fundamentally, it's tough not to like the space, frankly, right now. Silver, it's got that gold aspect to it. People want to own silver when they think the world's coming to an end, but you also want to own silver when you think the world's growing like crazy because it's such an important industrial metal. And so we had our downward wedge here, breaking out of that, testing the 50-day. Looks a little better in the gold chart, actually, but we do have some of this, a little bit of a rolling over there. But again, silver, if you believe that we're going to get some infrastructure spending and you believe that they're going to continue to print, till the cows come home, which they have to, And we gotta own some silver in our portfolio as well. Agricultural commodities, that's been just a wonderful place to be of late. I think we're getting a little bit of a sell-off. I've said that this is unsustainable. Make no mistake, it is, and it won't be sustained. So we will get a sell-off in this position over time. But boy, right now it's just almost exponential in terms of that. Relative strength wise, relative to its performance of the last 14 days, it's still overbought. It's still extended, but it's not as extended as it was. So, I expect a real choppy go of it, but over the foreseeable future, and if you just think about the short term concerns about inflation that everybody's talking about, well, that plays nicely into ag commodities. But again, market's gotten a little ahead of itself here, so don't expect this to just go on ad infinitum. Never does. But fundamentally, gotta like it, and it's a great hedge against the stock market historically, in that it just doesn't correlate with stocks. Base metals, same thing, right? Copper, aluminum, nickel. That's components of this particular index. Nice bull flag that didn't really play out. So that's not that anymore. Although now we're ramping up a bit. Really nice momentum in here. Earlier in the breakout than we are with ag, which I just showed you. For obvious reasons, I'll try not to be too redundant. Owning metals futures right here makes a lot of sense, and therefore owning the miners makes a lot of sense. And just remember what I just said about gold miners. Same thing for metals miners. And here we are getting a nice early buy signal here. We still have the wedging though. You still have that longer term pattern that's pretty much across most sectors. Not all of them. I just showed you a couple that aren't. But kind of like this, really, fundamentally and technically, it doesn't look too bad to me. And we're going to run up against this resistance right here, testing this top from a few weeks ago. So again, with or without the technicals supporting it, miners make a lot of sense for quite a while going forward, I suspect. The yen, we have that small position in the yen. The yen's a very defensive currency. The world is crazy short the yen, and I can tell I'm not going to have time to really jump into the currencies. But, well, you get some short covering in the yen, and this thing's going to pop. You get a big sell-off in stocks, and this thing's going to pop. The yen is really the defensive currency in the world right now. So this is bullish, right, frankly. This is bullish for everything else that we're doing, because if the yen is getting weak, that says the world's not too worried about it. Now, this, I will say, that this sell-off right here that ironically corresponded right with a test of the 50-day moving average, that was more about a Japanese kind of policy announcement, this just really right here, that basically was somewhat sanguine about what they're seeing and somewhat benign in terms of action going forward. And the world saw that. It saw their terms, without getting into the weeds in terms of what they said, but basically saw that announcement as bearish the yen. And so for idiosyncratic reasons, the yen was really trading on Japanese news as opposed to global news, which is largely what pushes the yen most days of the week. Verizon, are we stubborn owning this thing, right? I only give it a 5 and downgraded it. These just aren't great looking charts. They come and go. Lost the 50-day moving average. Losing its momentum. Announced, I believe it was yesterday or the day before, that they're looking to shed themselves of some serious assets. Often the market will reward that kind of news, so we'll see how that plays out. Pays a whopping dividend, which I like. And what really has hit this is news from the Biden administration that their telecom or the broadband infrastructure push is going to be more out in the rural areas. Both Verizon and AT&T are two positions there. Said that they're going to focus more in their big markets. They're not going to exploit that spending there. So where people might have thought, wow, they're going to get a ton of government largesse coming their way, that announcement or that proposal didn't really play in because of how these two companies, Verizon and AT&T, responded to it. And again, I view that as important information, but we're not buying it solely based on, where the government's going to be spending its money. Not solely. We're buying it more on the trends in that industry and where the positioning is for these two. And frankly, I like their dividends in this very low yield environment. So for now, we have no intention on cutting or dropping that position. But are we constantly investigating it and exploring it and studying it? Yes, of course we are, both technically and fundamentally. And speaking of AT&T, huge gap up here on some positive news. Gaps tend to be filled, trying to fill that gap, getting right back down to this area, which is right on the 50-day moving average. Still have a little buy signal in here. So idiosyncrasies about AT&T specifically, have given us a little optimism, or giving the market a little optimism in here. Love the dividend, like it as an income play. TAN, a cute name for the solar stock ETF. Kind of been all over the place. We knew when we added this position that it had a big run up. We wanted to see, the results of both the Maine election and the Georgia election and this and that. And we waited for a little bit, added to the position. So it's lower. Looking pretty good, frankly, technically, although this one's starting to give way a little bit. But yeah, so we had a buy signal from way down below this center line here on the MACD. That's usually very bullish. Testing this resistance, keep bouncing against it, may very well break down below that. Small position for us. Nothing right here telling us that we need to get excited about it. It's not having a huge marginal impact, just a marginal impact on our overall results. Yeah, we know, of course, the big push and the tax incentives for solar. So we'll hang in there with that. That's why we kept it small, though, because it was somewhat precarious looking in here. And again, we could add to it if it gets really low and we like it, or we could dump it all together if our thesis changes. Wind, fan, right? Got a little better in here. We have a better looking, 50-day moving average. Broke above this area. We're kind of creating a triangle in here, if you will. Look okay down in here and so forth. Big tax incentives for wind production here going forward. Same kind of timing. We as we knew. Small positions, scale in marginally. Way down here, I suspect we would take that as an opportunity unless something about our overall thesis changes. Water infrastructure. This one has just been steadily, making gains and broke above our divergent high line here. So we're gonna have to move that up. We are wedging. That's not good, overall. But that's going to be a big push. Is replacing a lot of water infrastructure in the U.S. with the infrastructure bill that'll come. The size and some of the direction is left to be determined. But yeah, water is a component there, so we like owning that. MP materials, rare earth materials. This one's had a rough go of it of late. Really, really, really like this position. We were up nicely, and I think we've given all those gains back. It's really probably the only play in the U.S. that we can make here in rare earths. And make no mistake, they're in everything, and China has had a lock on those. So reasons to be bullish here. Going forward, speculative stock, lots of trading interest in this thing, both long and short. So it's going to see big whipsaws, big volatility. Right now, we're holding it for the long term. Nothing right here tells us that we shouldn't be. Uranium miners been getting a nice lift here yesterday, and I think today they were up really nicely there for a while. I don't see much in the green though right now as I speak. Yes, so big push for clean energy, and uranium is the cleanest, of course, but there's the dangers there that people worry about. Globally, even in the U.S., more warming up to expanding capacity in the nuclear power space. So uranium is we think, a no-brainer, for lack of a better term, a smart position to own longer term, and it's looking better here technically, and I upped it to a 5 here. Albemarle, I think that's how you pronounce that company. It's the U.S.'s biggest lithium miner. Struggled in here. I think we had pretty good timing in terms of our entry on this one. This is looking good technically, bumping up against that resistance right there. Looking good from a momentum standpoint. Second largest producer in the world, largest producer in terms of supplying lithium for vehicle batteries. So some would call that a no-brainer for a long-term patient portfolio. Just added just the other day, a week ago, Monday, TIP tracks the index for Treasury inflation protected securities, move some of our fixed income exposure there. As I've been preaching about inflation, of course, it makes sense relative to our thesis. It's up, as of this morning, it's up like 40 basis points, almost 0.5% since we bought it, in a week, which is a lot better than where it was sitting, which is like 1% for a year. So, but off a little bit today. So, there's going to be some volatility, as you can see here. But as a long term, if we do think inflation is coming, which we do, or it's coming for a longer period than maybe the Fed chair would like us to believe, then that's probably a smart play. But like anything else, though, we'll keep a very close watch on it. And folks, that rounds out our positions. That was longer than I'd hoped. I'll edit it down as far as I can, and we'll skip currencies today. And thank you, as always, for watching and listening. And I'll talk to you again soon. Bye-bye.